Alright traders, this is really a part two, continuing on from the previous trade analysis video which I've just uploaded. So if you're looking for 15 or so more shares which I've just analyzed, have a look at the previous video because we just went through this watch list over here on the left hand side of my screen. What I'm going to do is continue on with some trade analysis, and we'll walk through some additional shares which is setting up for potential moves this week, moving into the trading week beginning Monday the 24th of March 2014. This is eBay. What we've seen in eBay is a very long sort of consolidation pattern, more or less what we call a channel. Now this has been set up for the most part of a year now, over a year actually. It's been a year and 2 or 3 months now. But what's happened is that we're very close to old resistance levels. We've essentially broken out, and what could be happening is that we're just retesting this old resistance as new support, and we're getting set up to bounce. So just off this basic price analysis, without going into any further analysis, you can see that I've set up two triggers here. One at 58.32 to be looking into long positions on eBay, or at least call options contracts. So this is a really good area for a bounce which could take place. Of course, the orders are all contingent and they're based on price. So we need price and price alone to obviously generate these triggers which are going to get us into those options positions. If you're not interested in the 58.32 bullish trigger, if it's a little bit too premature or a little bit too risky for your own risk analysis, then this $60.05 entry is really the one that you want to be looking at. This is the ultimate swing high. It's the all-time high, and it's where there's nothing or no resistance levels holding it back from making much more substantial moves to the bullish side. If in fact, however, this is a false whipsaw or a false break, which I do not think it is, then we have this 55.32 entry set up to catch the next natural oscillation down to support. So very neutral on eBay. It looks fantastic to trade. Facebook, I don't really want to dwell on this too much. We could be setting up a bit of a double top. But really we're in a bullish trend. We've got open windows. We've got a bullish rising trend line which is going to act as support. So you've got limited downside. Really the trade you want to be looking at is a breakout above $73.15. GILD had a nice breakdown from last week. We had an entry here at 74.30. Almost at our target down here at $70.37. So once we get there, liquidate your positions, bank your profit, and do what you want with it. Other than that, let's move on to IRM. IRM is in some form of a little bit of a pennant or a triangle. We've got two bracket trades set up, 29.24 and 26.53. I still like them. If I change to the volatility bands, or what we call the Bollinger Bands, they're starting to squeeze. They're not in that really defined squeeze yet, but they will definitely continue to constrict price if in fact we move sideways. At that stage, we could definitely bring down the triggers a little bit lower, but just at the moment, we really need to wait for additional price analysis or price data to come to us before we can get into those specific trades. Here's MA from last week, very close to triggering on the bullish breakout. Instead, we got that very bearish candlestick on Friday. So that's telling us that price definitely wants to move lower. We have to ask ourselves though, where's a good location to look at entering into bearish positions? And really the answer is, if I can just duplicate this and bring it down, it's really around this level at 74.66. Is this a trade? I mean, pardon me, is this a trade that I'm looking forward to? No, it's not. So personally, I will not be placing this bearish trade at 74.66 just because of this rising trend line. Now, I don't want to get whipsawed to the downside and then get that bullish bounce, which could occur all around this level here. So I'm simply going to wait on MA to the downside, and I'm going to keep this bullish trigger at about $80.06 for that bullish break if in fact it does occur. Now MU Micron Technologies, I do believe that was the current Suits episode, season, what was it, 2 episode 13, most recently aired. I mean, last time they had a, or referenced the company, it was Tesla Motors, and that just went absolutely nuts. So I find that a little bit interesting. MU anyway isn't really displaying the same sort of gusto as what Tesla did after the Suits episode. Nonetheless, though, it appears to be consolidating or potentially breaking down. I do have a bullish trade set up at 26.13, and I do think it will hit that, but we do have earnings coming up, so it's something that I'm not really looking at trading because earnings is really 2 weeks away. So when you're a swing trader, you need to sort of have the psychology anyway of holding positions up until really a month, and if earnings falls close to that or is going to sort of get in the way or hinder the progress of the swing in price, then simply just don't trade it. All right, you don't want to be battling time with options. You're already facing theta decay as an option trader and as an option buyer, so adding a little bit more resistance to an option trade. It's just not something that you want to put yourself in. Tesla Motors, having said that, is appearing to make, let me just bring this up on the chart, a little bit of a descending triangle. Now, it's not textbook. When we talk about descending triangles, pardon me, we like to see them set up over really 2 months, 2 to 3 months. That's when you get the really nice clear directional breaks. However, it does appear to be breaking down, which is interesting, but we do have that open window, which is going to act as support. So although it looks bearish, I'm not going to be placing bearish entries or bearish trades on Tesla Motors. Instead, if in fact it wants to bounce higher, 250 is really the entry that you want to be looking at on Tesla. Moving into Twitter, Twitter's really just, not really doing much at all. The price doesn't look that significant, but it really is. I mean, right here, we're trading at $55 at this resistance level. And at the moment, we're trading at 50. So just from here to here is a $5 move on a $50 share, which translates to about 10%. Is there a good swing trade on Twitter at the moment? Potentially. I mean, we could call this at least a little bit of a swing low. We did hit it as resistance over here in the month, of November. So, I mean, you could set up a bearish trigger somewhere below this level, about 48.79. Lower levels are down here, about 45. So it does look appealing in the risk-reward ratio. Let me just go through some additional analysis. Now, this is such a new share that we don't even have a 50 exponential moving average to work with on Twitter, so that's a little bit concerning. Again, our long-term simple moving averages don't even appear. And also, I mean, our signal line, our MACD line, is really, I mean, it's just too premature. There's not enough price action to work with. So this is something that I'm not going to be trading just based on the fact that I can't really analyze it full circle. So it really breaks my own personal trading plan, but I will leave that trigger there and we can come back and see what actually happened with Twitter. Let's move on to Yahoo. Yahoo again. We're really interested in anyway last week with this 36.21 bearish entry. It didn't trigger, which is fine. Instead, it gapped against us. Not that we were in bearish positions, but it just simply didn't validify the trigger itself. And what we've really set up is some sort of range-bound market. So really the levels I'm watching are 36.21 bearishly and then 41.88 to the bullish side on Yahoo. Anything in here is going to be choppy. It's going to be a chop fest and it's not going to be ideal as a swing trader. Here we have Zinger. Zing is retracing into that 50 exponential moving average. Let me have a look at these oscillating indicators. And again, they're really bearish. They're all moving lower. We are getting oversold on the RSI and we could bounce from here. Really the bearish entry is $4.65, moving down to the open window support, which is going to be $4.10 a share. So that's the trade setup on Zinger bearish. In the way of a bullish trigger, there's no bullish trigger on Zinger this week. It is quite bearish. All right, so thanks a lot for watching this video. Have a great week, everyone. I'll be back with you during the week for additional market updates and also some updates on these individual trade analysis or on these individual trade triggers when in fact they do trigger. All the best, everyone. Goodbye.